Hi traders, this is Mike Hamilton from Trade Easy Way, and just delayed my update this week just to get a better feel for what the market wants to do after some very bullish jobs and GDP data in the last 2-3 weeks. And this is the Nasdaq on the weekly chart, and I talked about how I felt this was basing here. So I spent the last few weeks talking about this, and here we are, had a couple of nice weeks coming off this higher close up here, having seen that got bought down there. Okay, so we're close to all-time highs, and the MACD shows you how lagging these indicators are. The histogram is only just about attempting to get over the midline, and the averages have not crossed yet. So potentially, if we can get up here and push higher, then we can get into 14 to 15,000 before we are potentially due a nice pullback. Okay, so we've got great US GDP figures, jobs growth continuing in the right direction, the stimulus package agreed and checks on their way out, which has not come into the market yet, not fed into the market yet, and President Biden is attempting to get a $2 trillion infrastructure project, infrastructure plan through. Okay, so that's all suggesting that this market can go higher. Let's cross to other indices. I can see on this weekly Dow, this Dow has been pushing higher, and we're getting a little overstretched here, so it's possible we need a pullback to 33,000. We're 33.5 roughly, just under 33.5 as I speak. So yeah, it's been on a huge run, and we are somewhat disconnected from the averages. We've not been around, we've not tested the 20-day average since late September, November, late October, early November, when we came down here, landed and pushed up. I do think we're going to see 34, 35,000. Like I said, options expiring next week. It's possible we hover around and consolidate here. No reason to sell this at the moment, but I do think this average needs to catch up. So I can see this dithering and potentially pulling back into 33 and maybe a little bit lower before getting another leg up. Alright. DAX on this weekly, these are all weekly charts by the way. DAX on the other hand, it's got the same problem. We've broken out, very nice breakout, but I think we are potentially going to consolidate, hang around this 15,000 mark, and wait until this average catches up. So we could see some lower numbers in this DAX as these averages catch up, and before we go for 15.5 potentially. So we are currently 15,150 as I speak at midday Wednesday UK time on the 8th. Right, let's look at the FTSE. I've been talking about how the FTSE needs to catch up, and we're very close to this 69.50 now. So that looks as if we may even come in contact with that this week. I can see this is going to be the second touch. Again, I think we may need to pull back. The second touch may get rejected as well, but I think the third touch will break through. I think it's going to be a case of 3 and through. So certainly seen some little bit of hesitation in some of the main UK stocks, as they've been on a good run and they are just taking a little bit of a breather. So the MACD again is all looking bullish. We're above the midline on the histogram, averages are crossed, we're getting a nice push and a nice crossover on these 89 and 20-day averages. So it's all bullish, any pullbacks are to be bought on that FTSE. Gold, I suggested the bottom was in on gold here, and so we've got this pin bar last week pushing into 1750 now. Any pullback, we may need another pullback deeper into this range, close to the 1700, 1720 before making a run for 1750, or very close to 1750 as I speak. In fact, we're just fractionally under it. So any pullbacks to 1720, 1730 potentially to be bought, and then we look as if we can attack 1800 on the gold, which will bring me to miners in a minute. Oil is taking a breather, and it has been taking a breather for a few weeks now. So we've got a 1, 2, 3, 4, 5. Now we're potentially getting a 1, 2, 3 wave correction. Again, disconnected from the averages. So any push into 55. Not sure we're going to get that deep, but certainly we're certainly struggling up here. So I think if we are currently, what are we, 59, 59 and a half. I think if we can get a dip into 55, I think that will get the buyers back in again to get us back up to 70. So I think the oil is buyable. If we can just dip a little more, then I think that can set that on its way. I think what's fundamentals are that if the US does make friends with Iran, that could see a lot of Iranian oil coming on the market. So that might create the dip that we need to get this market going. But it's a nice chart, nice 5-wave move. So we're definitely in a 3-wave correction up here. That's a question of potentially getting a lower number to get that correction completed, and then potentially up to 70 plus on the oil. Silver. Silver appears to be getting ready to test 25.5 plus 26 as a major resistance point. It's a nice bull flag. These are all weekly charts, by the way, just to remind you. So we've got huge move up here into 29.95. Then we've got a 1, 2, 3 wave correction, 1, 2, 3 wave attack of 29.95, 30. And now, so this is another corrective wave. So we're forming a base here to get up to 30. And I think the next time we touch 30, that's going to be through and through. I think we're going to push into 35, 40 plus. So silver's good. So let's just have a look at the miners. That's a very nice chart pattern. So my suggestion has been for the last week, POG. So I think this is connected with this average, and we look as if any 24 to 25 is still buyable if we see it, and I think we can get up to 27, 28 and potentially 30 plus. So again, huge sweep up towards 42-ish. We've got a 1, 2, 3 wave correction, and then a further attempt to get through 35, which failed. But now we are reconnected. I think we can work our way back up to 30 plus. I think we could end up the year at anything between 40 and 50 potentially, if the gold continues to push higher. I'm looking for 1.5% to 2% inflation in the autumn in the US on the basis of all the printing that the Fed are doing and funneling cash into the system. So I think that's going to show through in these charts. Polymetal, I suggested last week that polymetal was a buy, and you can see huge platform here on the polymetal, pin bar buy signal. The histogram's divergent. Can you see how that lower is higher than that low? And yet, so there's the divergence. Increase higher low in the histogram, lower low in the charts, back into key level of support of 1400. We were up at 2100, so we could potentially start to make our way up there in poly UK stock if that can just break above that 1500 mark. Other miners, Fresnillo, same story. They're all coming into key levels of support. They've all pulled right back with that weakness, the prior weakness in the silver and the gold, and some excess in other metals. But this again, Fresnillo looks as if this £9 mark can hold, and then we can potentially come back. Nice ball flag. So as long as we can start to pull out of here and get above the £10 mark, I think we can wind up and get back up to those highs in Fresnillo. But POG at the moment is my favourite. It's a nice cheapie, so you can get more leverage on it. That's the reason why I've suggested it. Centimim, that's attempting to pull up as well. So that was up there at 227. We seem to have found a floor at the pound mark, surprise, surprise, and that is pushing up. Alright, so that's my suggestion at the moment. Hope that helps. Look forward to the weekend prep. Do join me if you would like to. Look at the website tradetheeasyway.com. Scroll down the home page and you'll find the events page for the link. Alright, enjoy the rest of your week. Have a good weekend, and look forward to talk to you again.